Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, as well as markets that are closely related and can even impact the precious metals. And Miles, with last week being a solo show, it's good to be back with you. I've had a little bit of an absence here, but I do have to compliment you on the charts last week and the updated technical analysis. I'm excited to see if you think anything has changed since last Wednesday when you recorded. What are you seeing just precious metals wise? Let's start with gold.
Sure. Well, and I appreciate that, Tori. It's always hard when you're in here with nobody holding you accountable to not just make a whole bunch of stuff up about the chart. So I am actually glad to see that some of my predictions did come true, especially about the dollar continuing to slide, which we'll look at. But let's start with gold here. One thing I did point out last week that we are seeing is we had a little bit of a short-term double bottom in gold. Now, one little thing does not a reversal make, but we did have a little bit of a double bottom here. We are seeing gold continue to climb up slightly. I would argue we're at the very first level that we need to break above, and that's right here at around 1675-ish. And the reason that matters is because if you wind your charts back a little bit and look over the last couple of years, we're actually looking at the previous market floor for that long 2-year long trading range we had in gold. So we did break below that bottom 6 weeks ago or so and came back above it, came back below it, put in this double bottom, and now we're back up to it again. So I actually am going to continue with what I said last week. I think we're looking at least a short-term meaning the next few months, reversal back up in gold. I'm not quite sold that gold has fully reversed its long-term trend yet. I would need to see some price levels above that. So I'm looking at the 1675 number, as I mentioned. I like about 17 and a quarter, 1725. That's the previous short-term high. And then finally up between like 1785, 1800, where we had the high back around the end of July, beginning of August. That's going to be the real break point where we can say, okay, it actually does look like gold maybe, if not definitely, is reversing. And it's very likely that you could see that play in the next few months. Well, and what's coming in the next few months? January, February, March, which traditionally tend to be pretty good months for metals. So, yep, could have just seen a reversal a month ago, and we could be seeing it climb from here going forward.
I'm with you. I'm not necessarily sold that this is a reversal yet, but there are two things that would suggest that it possibly could be. And maybe we skip ahead to this a little bit. It would be out of order for us, but the U.S. dollar showing some continued weakness, as you alluded to, right? Same thing with Treasury yields. So those have been two primary headwinds for the gold price. And if those start to reverse in unison, well, then that could point to the fact that gold could start to steadily climb. The two things that go against this being a reversal, in my opinion, however, are that the underlying fundamental trends haven't changed, namely rate hikes, right? We know, and we'll talk a little bit about this, but also the fact that seasonally we've got December coming up, and we tend to see, much like you do in June and July, you put in another low for the year almost every December. So those are two things. It's a tug of war, if you will. I don't know if you want to dive deeper into one of those subject matters, or do you want to get to it after we go through the silver? You take the lead.
Let's save it for a quick second because I think you're right. I think the key here is these are the underlying reasons why we're seeing this movement in the precious metals. So let's do glance at silver real quick, maybe talk a little bit of ratio, but then I agree. I think we need to look at the equities market, and I think we need to look at the US dollar especially, and the dollar index, and where we think we could see that going, because we've had so much up in the US dollar, down is a long way. And we'll look at some of those numbers. So moving over to silver quickly, same kind of concept. We're having a little short-term reversal in the silver price. I expect to see silver continue to climb. I think spot price could reach as high as 2160, 2170, somewhere a little under 22. I think that's at this point pretty definite. We're going to see another couple bucks up in silver.
That's a nice 10% move if we see it.
It is.
Much like what we saw a month ago.
Yeah. Now, the question is, what does it do after that? Because now you're also looking at, like gold, you want to start moving above some of these previous higher highs. That puts us at 2250 to 23. Your 50% retracement, so for us to move about halfway back from where this longer-term bear market cycle started, is bringing us up to like 2290, so about $23, I think would be a good next high in the price of silver going from there. So if it were to continue up, again, it'd be just like gold, right? We just saw the reversal pivot point. It's just hard to really eyeball those while the knife is falling. It's a lot easier to look back over a couple months, couple weeks, couple months and say, okay, we're starting to build a base. We're starting to move in the right direction, or at least the expected direction, and resume this multi-year, decade-long bull market by the time it's all said and done. On the downside, however, just for fun, on the downside, because we did come into a pricing level that dates back to about 2020 before the massive breakout where silver went from 16, 17 bucks all the way up to 30.
Well, starting at 1175 post-COVID
right.
in 2020.
Yeah, on the big dive. So, but the breakout point was sitting right where we're at now. So actually your next step down would be around 15. So that's the other thing we could end up seeing happen if the U.S. dollar just keeps getting stronger and stronger. And this is the big if-then statement.
And
how long can we do it?
Yeah, well, and if the economy keeps getting weaker and weaker.
Yeah,
right?
and $15 silver is $20K on the Dow. I mean, we're talking a catastrophic plummet of assets as interest rates potentially go up. And, you know, Jay Powell knows this. I appreciate how aggressive he's being. I'm frustrated that in their attempt to curtail the overspending in the private sector by raising interest rates, the government has made absolutely no attempt whatsoever to curtail spending on a federal level. So they're just borrowing at higher and higher interest rates. So it would be nice if everybody was playing ball. It seems like the Federal Reserve is playing ball. The U.S. public is required to play ball because we can only borrow it so much. The federal government doesn't care. They're just going to keep borrowing. They don't care if interest rates are 0 or $1 million. It's irrelevant.
I like your World Series reference. Let's play ball. But that aside, I'm going to bring you back now to the dollar.
I guess it is that time of year.
It is.
Yeah.
So now I'm going to bring you back to the U.S. dollar because you just alluded to two things. One is the Federal Reserve rate hikes. So we have a meeting a week from today on the day we record, next Wednesday, the 2nd. You have another FOMC meeting. All expectations are that we're in for another 0.75 of a point rate hike. There was 1% being flirted. Doesn't look like that's going to be the case. Likely another 50 basis point rate hike in December. But they've been now talking a little bit about a pause. So to me, that would mean the dollar has room to turn back around and go up. That's, again, hypothetical. But let's dive into the dollar chart here for just a second. Tell us what we're witnessing here as we've come from 115 down to below 111.
Yeah, so I pointed this out last week. You know, we had that high at around 115 with a normal run-of-the-mill drop following. Now, we had this attempt to push back up to it, which has failed pretty spectacularly, and the decline we've had in the dollar over the last couple days has been significant. So how much of that is anticipation of the interest rate rise? How much of it is international pressure, selling off bond positions, preparing to reinvest into interest-bearing assets at better pricing next week? Sure. Maybe there's some of that as well that's pushing that market down a little bit. From a purely charting standpoint, pretending there was no FOMC next week and all you had to look at was the chart, I'm not quite bearish on the U.S. dollar. I do like the fact that we've put in consecutive lower low and a consecutive lower high. I would argue strictly looking at the chart, 105 on the dollar index is a guarantee. Now, with Fed tinkering with interest rates, that may not happen, but I do think you've got a fair bit of downside potential in the U.S. dollar, assuming there was no interest rate discussion next week. And that would be a very shallow return just from what we've done middle of 2021.
So this recent 5-point drop in the U.S. dollar index has resulted in a $100 increase in the gold price from the low that we put in. When that dollar index was at its high, gold bottomed below the 1,600 for a brief period of time, and now we're up $100 from there. So that's likely an indication of the trend that would continue if we saw a continued dollar decline. We've been telling our clients all summer long, look, this is all about the U.S. dollar index. This is logical price movement compared to a very strong relative currency when you take into account other currencies. That's what the dollar index is. That's why gold's not down in any other currency in the world, right? We're king of the mountain right now, currency-wise. But I want the listener to be encouraged. Here's a recent example of when the dollar turns down, how the precious metals prices will tend to reverse and find a floor. When is that going to happen? Miles, I hear you saying you don't know, because there's Fed tinkering, there's seasonal weakness coming up, but there's also this trend that may continue. So I wish we could tell the listener, look, we're definitely going to do this or do that. We don't know. Again, it's a tug of war. On top of that, though, with the silver price doing what it's doing, what has not diminished and what has not decreased either is demand.
No,
right? I mean, we're
not
seeing
at all.
premiums sky high on the silver side. I know that's the hot topic right now in our sphere, in our market. And this week is no exception. In fact, there's some continued climbing in premiums. And it doesn't matter if it's like we've had a blast here this summer, and especially here in the last month. Junk silver, silver American Eagles, old Peace dollars and Morgan silver dollars, all three of those silver products can move into bullion bars, and we're picking up between 20 and 40% more ounces of free silver for our clients. That's something that's worth discussing and why we welcome the spot price decline, because it almost always happens when the spot price is down and the physical market stays hot, right?
Right.
So let's take advantage of this. I mean, these are great opportunities where a lot of our clients haven't even been exposed to the price drop because of the premiums hanging in there or even climbing. You've been made immune to the silver spot price drop. So be encouraged by that. Secondly, we've seen the ratio come down. Silver has outperformed gold substantially over the last month. Ratio's down from 95 to 85. So you've been on the right side of the fence by being in a silver position. Maybe that trend continues as well. We have eyes on that, and it'll be really fun to go from silver back to gold when each individual portfolio shows the math to make sense.
Yeah, imagine increasing the quantity of ounces of silver you have because you bought Silver Eagles 5 years ago and you're swapping into bars. So you pick up an extra 20, 30, 40% ounces there. And then at some point, the silver to gold ratio realigns back the other direction. And now you're taking an extra 40% of ounces of silver into an extra whatever that math is, free ounces of gold. It's amazing how the compounding ounce strategy ends up working, not just between metals, but when you actually pay attention to specifically the physical precious metals markets and the dynamics between different products just within that small market itself.
That's right. And that's what's gotten us so much excitement in our markets. There is not a product availability concern right now. I get a lot of calls saying, you probably don't have any availability. No, we have no issue. We're a 50-year-old precious metals firm with a large network and a lot of connections. And it's not an availability, it's a wisdom thing. What's the most prudent way to pursue the metals? You want to avoid the high premiums. Do not get sucked into, a particular product that you're most fond of right now. You'll end up in it later, right? Allow us to help you avoid the premiums, get the smartest product for your portfolio right now. And whether that's a swap or whether that's a new position, doesn't matter. We're seeing some of it on the gold side too. There are gold products that have high premiums that we can get you out of to pick up additional ounces in gold. So it's working within metals, it's working between metals, and it's working from one product to another that you wouldn't even normally expect it to be the case. I want to address one other thing. That is this concern that's in the market that anything held in depository is not safe. Okay, and I want to remind everybody, depositories are not the banking system. There is an unbelievable amount of pressure in the markets right now in terms of the sheer magnitude of volume that's transpiring from metals movements. It's IRAs, it's storage accounts. It is not a cause of concern. It's not dealers or brokers out there that aren't fulfilling promises. It's the depository being bogged down. We got a report that just one IRA trustee is opening as many as 3,000 precious metals a month right now. There is a huge exodus out of traditional assets into precious metals in retirement accounts and out of retirement accounts. Well, that overloads the depository from the standpoint of merely flow, not ultimate delivery and credit to the appropriate account. We're talking about the pace that it's occurring at. So how slowly is it taking? If it used to take a week, it might take 3 weeks now. Please hear me, not a cause of concern. These are audited, insured facilities that only do this, and we trust them implicitly, and many of them we have known for 40 plus years.
So after looking at some price movements and some potential direction for metals as we're closing in on the end of 2022, and then obviously some, let's say some concerns specifically within the metals market, product availability, storage, storage protection and insurance and so on and so forth. All of these are, like I mentioned, very specific within the precious metals market, but we also have to take a step back and look at how everything really is revolving around the US dollar right now. With the equities market and gold and silver and whatever the dollar does, you can assume everything else on the planet is going to do the exact opposite. So while it feels like everything is revolving right around Jay Powell, from both a domestic and an international standpoint, I think there are a couple things that may be getting missed as we're taking a look at how these markets are reacting. So from a geopolitical standpoint, what else is out there that is probably playing into some of these price moves that maybe the average person isn't paying attention to?
That's a great point. I mean, top of mind is Russia and Ukraine, right? We know that created the spike in the gold price back in March,
right,
where we went back and touched that previous high. You should expect that to play out again as you see spikes in geopolitical tensions. I mean, we have domestic elections, so from a political standpoint, you've got some uncertainty just 2 weeks away, like what transpires in Washington. Same with England. Look at what's transpired in England with Truss out, and in just a short record period of time now, you suddenly have a new prime minister who is absorbing a very unstable seat. There may be elections there too, so instability there. Russia, obviously, continued tensions growing, continuing to take bigger steps. Same with China, Xi Jinping. You need to go listen to the McIlvaney Weekly Commentary this week. That's a power grab for the ages. We are living in history right now, and everything is changing. And Iran, same thing. What I'm kind of alluding to are these BRICS nations, right, Miles? I mean, They've talked about, now they're talking even more boldly, but they've talked about just coming against the U.S. dollar. You talk about having an impact on the dollar and weakening it. We've had the pleasure, or the privilege, I should say, not the pleasure, but the privilege of exporting our inflation. Our inflation is so high, but can you imagine if we weren't the world reserve currency?
Let's be honest, it's also been a pleasure.
Yeah, well, for some power players.
Just call it what it is.
Yeah, well, it's delayed our gratification from the standpoint, it's delayed our pain and preserved our gratification for a while. But the poor developing nations that have absorbed that inflationary export, that's what the world is angry about. Of course, the BRICS are going to want to come against the U.S. dollar. Between currency wars and influence and inflation, where we can print to our heart's delight, that to me is the underlying issue. Now you see Saudi Arabia starting to join their alliance, and you start to get a Mideast instability factor on top of the one that's already there because of Iran. So really good point. Eyes on geopolitics, 2023. Can it be as fascinating as 2022? I guess we'll see.
So that's going to do it this week for Golden Rule Radio. Tori, welcome back, and thanks again for joining me. And all of you out in YouTube land, thank you for joining us as well. So as usual, do the YouTube button pushing stuff if you want to. If you'd like some more information, you can find us on the web at McIlvaney ICA. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. And as always, if you want to discuss your personal portfolio with us, you can give us a buzz at 800-525-9556. Thanks for listening. Have a great week.